Welcome back to the channel. Welcome back to a late recording of the weekly price action journal. It's been a hectic weekend and trying to find time to put this recording out ahead of time, ahead of when or before the weekly candle starts to print for the new week. Ideally Saturdays, as I've mentioned before, Sundays, but it's just been such a hectic weekend that unfortunately it's not been possible. So I figured something is better than nothing, and it's important to stay consistent with your processes. And just because a time period has elapsed doesn't mean that you shouldn't do the things that you say or claim that you do consistently. So with that being said, we're going to run through this. Hopefully it shouldn't take too long, but most important thing is that there is some analysis, and there's also some takeaways to help build upon the foundations that you've already set, which will ultimately encourage you to keep improving. You will always find those 1% tweaks, and ultimately it will continuously move you forward towards consistency and profitability. So with that being said, let's delve into this, and I don't think it'll be a long one, but as I said, hopefully there's some bits and pieces in here that you guys will find useful and be able to take away, potentially add to your trading models and trading plans and so on and so forth, and hopefully will add some clarity. So disregard this candle here. In fact, for the purpose of this, let's just use bar replay and get rid of that candle, just to make it easier on the eye. Okay, so I don't have to keep saying disregard this candle or disregard these candles or so on. Okay, so for the purpose of this video, we've removed this week's candle that's printing so far. So heading into last week, I had noted how the previous weekly candle, this one here, had engulfed the previous candle to it. So this weekly candle that set the high, and because it engulfed it, traded lower, closed below, ultimately that has created a bearish weekly order block. Okay. Yeah, so that's created a bearish weekly order block, and I haven't marked it here, and there's a reason why I haven't marked it here, but we have a BISI here. So the market traded down into the BISI weekly and then found support, traded back up, as we could see in terms of how it closed for the weekly range. Okay. Now, one of the things with me, or certainly how I interpret the market, it's about symmetry and alignment. So as there is no aligned BISI here, I'm not looking at that to either hold or anything of that sort of magnitude, because ultimately I'm anticipating the market to trade to an aligned PD array. Okay, so I wanted to see, so because we had this candle and we had a confirmed weekly bearish order block, I wanted to see on the daily time frame lower whether we would have a high time frame cracking correlation at the highs to confirm lower prices, which would support the idea of the market trading down into this aligned BISI. And that's the difference, and that's the sort of key. That's how I interpret price. So external range liquidity, because we're traded above this high, we're traded above this short-term high here. So external range liquidity at all-time highs. And if we are now going to target internal range liquidity, I want to see some form of high time frame cracking correlation at the highs, and I'm going to want to see a move to aligned discount PD array in the form of this BISI weekly. Okay. So if we drop down to the daily, we've got a little bit more lipstick on the chart. So there's that high from the weekly time frame, and then we've obviously got the BISI weekly here. So heading into this week, so we can see from here, Monday, right? Excuse me. So heading into this week, and as detailed on the weekly commentary, with the market traded into the bearish order block weekly, which I haven't got marked up because it's not a PD array that I tend to focus upon before. Like, I wouldn't use that as a retest if price came and retested, and that would be a trigger to enter. So it's not important for me to have that detailed, but it is important just to confirm it's there. And if it's there, it could well be significant in terms of the overall picture supporting an idea of the direction of price. So with the market trading above this true monthly open, okay, so that for me sets the stage for potentially lower prices. Now, yes, we can look at the highs here and say, well, potentially we've got a lot of liquidity resting above here, and the market could, trade up there. But one thing that we have to note is the fact that from this low here, the market failed to trade above these highs. So with that being said, there is the likelihood that we could see lower prices, but we need confirmation. So we've got the true month open here, prices traded above. So I want to see a high time frame cracking correlation in the form of SMT at the highs to support the idea of lower prices, targeting then the previous weekly low here and the BISI weekly. Because if I'm going to see a cracking correlation on the daily time frame, then I'm going to be seeking some form of daily/weekly PD array that the market could well be targeting. Right? So as we can see from this, the market does in fact form SMT with NQ at the highs, and this was confirmed on the H4 time frame. Again, one of the things to take away in relation to SMT, a lot of people, and I've been guilty of doing this in the past, so I'm not naming or shaming anybody, but a lot of people who reference SMT ultimately just say, oh, there's SMT at the highs, or oh, there's SMT at the lows, and you get all of these other traders who like to mock SMT. Although SMT is a powerful tool, it's not in itself an indicator where it's, oh, there's SMT, take the trade. No, you need more confluences to support it. So for me, I like to see a confirmation on the 4 hour. So you need to define whatever it is your confirmation indicator to confirm that that SMT is valid and exists, and therefore we're likely to see a move lower. Okay, so mine was confirmed on the H4 time frame, and naturally the market began to displace lower aggressively to the high time frame draw on liquidity, which I'd highlighted as these two. So key takeaway from this time frame is the fact that the market was trading above the true month open. So already here, it doesn't necessarily mean that the market is in an overbought state, but for me, it's one of the prime indicators where I need to be conscious and cognizant of the fact that we are in a area that could promote sales. So above the true month open, market's consolidated. We've then got SMT at the highs with NQ, so it's powerful, and then the market is ultimately displaced lower down to the high time frame drawn liquidity. Okay, and as you can see here, this is the aligned high with NQ. So again, I'm looking at relative symmetry in terms of key liquidity pools and key imbalances before discerning my next move in the market. Okay, so moving down to the 4-hour time frame, let's enlarge this a little bit so we can get a little more visibility. Hopefully that is clear enough. Okay, so continuing on from the daily time frame commentary, I noted how Monday by and large consolidated, right? By and large consolidated, set the high of the day before trending, repricing and trending lower, whereby it ultimately set a true week open key price level. Okay. Then, as we head into Tuesday, the market trades lower, purges the old low H4, so we purge that. Okay, so it purges the old low H4. We set the low of the day for Tuesday, and also we have SMT with NQ, which set the stage for a model to trade higher. And if we look at this time frame with the market repricing higher, what H4 inflection point would be the most obvious that price could be drawn to? Well, that'd be the previous day's high of Monday. Okay, which is ultimately where the price drew up to. So the market creates this model down here, trades higher, purges the high of Monday. Okay. Creates Wednesday's high of day. It's previous day's high. Okay. Confirms SMT at the highs again with NQ. Relative to the daily time frame. So if we go back, go on then. If we go back to the daily, so this SMT here, that's what's been transposed down. So that's that SMT here, confirms that SMT. So the market currently is above both the true week open and the true monthly open. Before we see the market now reprice lower, confirming by closing below this up close candle, confirming the high probability order block H4, which sets the stage for a model in itself to seek lower prices. And then as we can see, the market retests this key price level. Look at the bodies of the candles not closing above. Wicks in, rejects, wicks in, rejects, wicks in, rejects. Tests this key price level before displacing lower and ultimately trading down to the high time frame draws on liquidities, as we referenced on the weekly and the daily time frame. So ultimately this busy weekly down here. Then we know how the market then formed SMT at the lows with NQ below the true week open. So that sets the stage for high probability longs if a framework is in play. And ultimately the market reprices higher to this aligned SIBI before rejecting and closing back inside of Friday's daily range. Okay, so there's a fair bit to take away here. There's a fair bit to take away there, in terms of how I've managed positions, or certainly ideas of positions based on market location in relation to the true week open, true month open, and various PD arrays and signatures to support either higher or lower prices. Okay, so moving down to the hourly time frame. That's a bit more tricky to I think that would have to do. Okay. So certainly more lipstick now on this time frame. So I want to start looking at things from a more individual perspective for each day. So that's a bit better. So as we look into Monday, the market opened at the true day open and pretty much consolidated for the entire day. Pretty much an entire consolidation. But we could see it marginally trended lower and below the true day open. But ultimately, this is the epitome of a trending day. Right. A day that you'd ultimately want to avoid. I mean, I'm not saying that you have to avoid it, because there are some models which happily work in choppy conditions, possibly on a really low time frame. But ultimately, you can still seek profitability within there. But nonetheless, consolidated, trending lower, but not too much occurring on Monday. Okay. Then the market, but one of the things Monday headed into Tuesday confirms the true week open key price level. So the market opened where we're on Tuesday, opened and traded above, sort of opened above the true day open, repriced higher to set the BSL London, so the buy side liquidity pool for London, or high of London if you want to reference it that way. Before then, we note the market reprice lower, and as we can see, it's repricing. No real displacement per se, but reprices lower and purge this old low H4. And again, look at the bodies of the candles, respecting the key price level, and the wicks doing the damage. But ultimately, the market purged this liquidity pool. Then the market obviously forms this high time frame SMT with NQ at the lows, obviously, naturally, before ultimately displacing higher, targeting the previous day's high, Monday's previous day's high, as the higher time frame draw on liquidity. Okay, so that is pretty much Tuesday. Then ultimately we closes out the day just prior, but ultimately reaching its high time frame draw. So then we head into Wednesday, but prior to the midnight open. So we've got the midnight open here, and then we've got the Asia session. So prior to midnight open, but within the Asian session, the market reprices higher, and as we can see, it purges this BSL H1. That's actually quite significant. Okay, so purges that H1 liquidity pool, and we set the high of the day. Right, but the market also forms, being above the true month open and true day open, forms this high time frame SMT with NQ relative to the daily time frame. Yeah, relative to the daily time frame here, before displacing lower and confirming both the bearish high probability order block H4 and the bearish high probability order block H1. Okay, whilst also, because as I said, it displaced lower. Hold on, why that hasn't. So, okay, leaving a SIBI, whilst also setting the London, as you can see here, that's the London low, just in there. I haven't marked it up, but that's the London low. Okay, so then we see the market. It's a bit more difficult to see, but in fact, let's just get a little bit closer into here. So we've got the SIBI. We actually have a SIBI here as well, but that's interesting. Could well be. Could well be this SIBI, which is the correct one to use. Okay, it's neither here or there for now. That's fine. Okay, so as we can see, the market then reprices higher. The we can see here the H4 order block key price level. The market comes to retest that, but it also retests the H1 before. Sorry, apologies. I was slightly distracted there. So yeah, the market comes up to retest. Reprices lower. Reprices lower down into what would ultimately be a H4 BISI before repricing higher again back into this key price area of 3 PD arrays. We also have SMT, low time frame, SMT, and then the market displaces lower aggressively. So that just highlighted the sensitivity. Obviously we had a model in here, but it also highlights the sensitivity of this area when price traded back up into it, how, if ultimately it found support lower, i.e. weakness, before displacing lower to set the low of the day. Okay. Okay. So we head into Thursday, where the market opens, immediately reprices lower. In actual fact, it displaces lower, if I'm being honest. Below the true day open, and we also set. Essentially, it's a equal low because we set the SSL London, but in actual fact, it's also overlapping with the previous week's low. Then the market reprices higher, where I note this PDA SMT, with NQ. So the overlapping or the aligned fair value gap, there's a cracking correlation there ultimately. And that's what I'm referencing there. Before the market displaces lower down into the high time frame, drawn liquidity for the week. Now, there wasn't an opportunity for me to engage the market there. I was hoping that there would be, but again, it's important and imperative that you stick to your model exclusively. You don't just make stuff up because you've got a gut feeling that something's going to happen. You need to see that confirmation within the charts as it pertains to your model before you execute. For me, there was one criteria that wasn't met, therefore it means no trade. It's as simple as that, irrespective of whether the market moves or not, because in the long run, that is what's going to help you yield profitability. So market trades lower into the BISI, closes for close of the day. And then we head into Friday, where prior to, again, the midnight open, the market immediately reprices lower during Asia, purging the SSL H1 and also the previous day low. So this is where we've now seen SMT at the lows with NQ before the market now displaces higher. Okay, so this formed a model in itself. The market confirmed higher prices when it traded back into high probability order block here, as we can see, rejected. So it's come back, retested this level and rejected. Before repricing higher, and ultimately trading up into this SIBI, which again is an aligned SIBI with NQ, where it trades up into it, forms the high of the day, and then rejects back into the daily range. So that is my weekly analysis. Now again, I always make the point, as you're going through this, you're annotating the charts, you're making notes on the side. You want to document any key takeaways that you've seen in the market during that week. It's important that that gets done. That is what's going to elicit your 1% tweaks. It's going to make you 1% better, and it's just going to continuously drive you closer to that that air of profitability that we all crave and seek. Okay, so it's important that that gets done. But ultimately, that's my vantage point of the market this week. It was tricky to some extent, but you just need to make sure that you're staying on the right side of the market. You're doing all the right things as it pertains to your model, your analysis, that sort of stuff. And as long as that is the case, then ultimately there should be no challenges, as long as we are focusing on the process and not the outcomes. So hopefully you managed to take something away from this session. Certainly think it was insightful. I think there was a number of different things on there which were key and useful. And so hopefully you've managed to nab something from there, able to add it to your models or your trading plans. Again, don't just add anything blindly because I said so. Yes, I have extensively tested pretty much everything that is within my models, but it's important for you guys to go and do the same thing. Ascertain your own results, find your own efficiencies and improvements, stress test your results again, and then once you're happy with the percentage or probability that it returns, then and only then is when you want to add whatever it is to your model or subtract from your model. So hopefully you've enjoyed this episode. I'm going to leave it there. Have a good trading week. Be careful. We do have the US elections, so there could well be some unscripted volatility enter the market. But again, be vigilant. For me, primarily, I'll probably stay on the sidelines till after the election. Maybe even the entire week. We'll have to see. But be vigilant. And hopefully be successful this week. And I will catch you guys in the next one.